What's up, guys? Bulls and the Bears here with the midweek update video. This morning we had CPI and retail sales, both very important consumer related data points that the Fed is watching carefully to see whether or not they're going to cut rates soon. CPI, which is inflation, came in overall lighter than expected. The year-over-year number was 3.4%. That was expected. So prices increased 3.4% from last year. It's not great. Fed wants around 2%, but at least it was in line with expectations. The market doesn't like surprises, and this was right in line. The month-over-month, however, was actually lighter than expected. The month-over-month inflation increase was 0.3%, and the expectation was 0.4%. So overall, inflation was on the lighter side. Retail sales, which shows the consumer spending, how much consumers are spending, that was also lighter than expected. 0% growth when the expectation was 3.4%. That's actually a pretty big miss to the favorable side, because the Fed wants inflation to go down and for consumers to stop spending. And this data seems to suggest that, at least this time around. So the market loved it. Market went up after that data came out. I believe it's up 0.8% right now. However, my account is down. Let's take a look. Down $43 today. It's changing. It's noontime. Market's live. So, yeah, we did have this nice spike right before the bell rang up to 23,500. A lot of my stock positions were rallying, and the covered call sold against them doesn't update until the market actually opens. So that's also part of the discrepancy. But then the stocks that I have just kind of sold off, even though the market's going up. So that's not cool. But overall, we're over 23,000. We're at 23,200. If I go to the 1 week look, I had this big dip on Friday to close the week. It was a horrible end to the week. But then Monday, Tuesday, and even today, the account's coming right back. That just seems to be the way it goes. It's been very volatile these past couple months. Maybe I can show that here, because it seems every time the account takes a big dip or has a really nice pop, it just gets reversed shortly thereafter. You can see a lot of these spikes here, especially through April. Dips down, spikes up, dips down, spikes up. And there's very, very sharp moves here. And here's that Friday data where we pulled back a lot, only to go right back up the next couple of days. So trending in the right direction. It's just a little bouncy. And every time I think things are looking bad, they come back. And every time I think things are looking good, I get humbled with a big sell-off. So that's kind of the nature of these last couple months. Here are my positions. We'll start with the stock positions. Still the same. CSIQ up 500 bucks. That's very good. It's having a good week. SOFI up $9, so that's in profit territory. You like to see that. Match Group still struggling, but better than it was in my last video on Friday. So that came back about $100, which would be $1 a share. Comcast was doing pretty good, and now it's not. So we'll take a look at that. I did sell some calls this week. I sold calls against CSIQ. I sold a call against my Nike Leap, and I sold SOFI calls right here. The other positions, RIOT, my cash secured put on RIOT, that was already explained on Friday. Same thing with my Comcast covered call, that was explained on Friday. And then my Nike Leap is down a little bit. So that's the state of my positions. But let's take a look at the charts and really talk about how these things are moving and what I'm looking for to happen. So we're going to start with Nike. This looked like it was breaking out yesterday. I have this triangle here, and you can see the daily candle on Tuesday broke out. We got as high as 94.30, and it was soaring only to come all the way back down, close red, and basically be a fake break. And now it's down 1.4%. By the way, let's just take a look at the market quick. SPY. Beautiful day. I mean, we gapped up like 0.5%, and we're going straight up at all-time highs, up 0.8%, and the market's loving life. But yeah, all my positions are down, almost all of them. look at Nike. Like, damn, I thought the market was going to have a good day today. And no, not for my stocks at least. Nike is down. But anyway, that's today. Let's talk about Monday, where I sold a covered call. So we'll drill down here. I'm actually kind of annoyed with Nike and CSIQ. I feel like they've been toying with me here. And it has to do with this massive drop on Friday. So Friday was expiration day. I had a covered call last week and I closed it early because, actually no, I let it expire worthless as Nike dropped and it was just in no danger of being assigned. So my covered call expired worthless. Then Monday comes and I'm open to sell a new call, right? But because of this massive drop on Friday, it put me in the worst position to sell calls for this week. Because, you know, as the stock drops, the minimum covered call that you can sell is going to fall down with it. You know, you can only go so far out of the money. And because Nike had that drop, I therefore had to settle for the bare minimum. The bare minimum strike that my rules allow for and the bare minimum premium my rules allow for. Because as Nike opened on Monday, it gapped up a little bit, started to push up, the 94 strike, which is the minimum covered call I can sell, the lowest strike I can sell because of where I bought my leap, that became available for the minimum premium of 24 cents. That's a 30% annualized return. And I took it because I don't like to let opportunities like that slip away. I could have waited to see if Nike would rally further and I could get a better deal or a better strike or more premium, whatever. But I don't want to let the opportunity slip. It's the bird in the hand versus two in the bush. You know, I like the bird in the hand because it's there, it's guaranteed. You might as well take it because the better proposition might not happen. So I took it and Nike just continued to rally. I probably sold the call right around here. It got much higher than that, pulled back a little bit, closed even higher than that. Tuesday came, ripped up even further to $94.30. My covered call was in the money. So basically what I'm saying is that when I say that it's toyed with me, I mean, like if it didn't have this random ass drop on Friday and it opened around 93 on Monday, I would have been able to sell a really nice covered call, like 96 for solid premium. But instead, it dropped all the way down here first, putting me in a situation to take the bare minimum premium and bare minimum strike, and then proceeded to just rip higher back to where it was before Friday. It's like, why did I have to do that first? Just the worst timing. So it is what it is, but here's Nike just collapsing. Look at this 30-minute candle here. Jesus, not good. So that means my covered call at 94 is not being threatened. And you know what? We're actually going to close this thing right now. Let's go back to Robinhood. Let's go to this Nike call and let's just close it. Because at the end of the day, with a leap, which is what this is. Let me close this first before I start talking. See if I can buy it back for 7 cents. I should be able to. Or maybe not. I collected 24 for it. Yeah, so I'll close it for $16 profit, which means buy it back for 8. I'm fine with that. All right, covered call is gone. You just watched me collect a profit, and you can see that down here. I sold the call on the 13th for 24 bucks. I just bought it back for 8 bucks. Profited 16. That's cool. Now let's go back to TradingView. So I did that because, first of all, I wasn't too proud of the covered call strike of 94. Technically, it's my minimum. It's allowable, but I would prefer like the 95 or higher. So I'm going to just take the profit because I would like to see if Nike can turn around and I get a better deal at a higher strike. Because as you can see, Nike can turn around. It can have a bad day, everything looks bleak, and then immediately just go right back up. So I'm going to wait for Nike to go right back up, as it seems to do when it has these nasty drops. So if I just be patient a little bit and wait for that nice pop, I can probably get a solid covered call. But of course, now that that's the plan, it's probably not gonna rally. But anyway, so that call's gone. Not only is the strike not the most favorable, but at the end of the day with the leap, I don't want to take assignment on covered calls. I don't, because it would actually lose money based on the nature of the whole trade. So I'm a little more aggressive to take them off just in case there is a parabolic move overnight for some type of news-related event. So I'm a little more aggressive to take covered calls off on a leap, unless the strike is at a really good level. And in this case, at 94, it just was not at a really good level. So there we go. Not a good look right now. Clearly, this triangle is still holding up. We had that fake breakout, and now we're selling off towards the bottom end of the range. Not good, but it is what it is. Let's now update the break even here on my position is 95.03. And that's going to go back, that's going to go down to 94.87. So collected 16 cents on that covered call premium. Now I can lower my break even by 16 cents. Man, not a good day for Nike. All right, let's move on to SOFI. Also not having a good day. You'd think something like a financial name would really benefit from this good news of potential rate hike coming sooner. You know, it should follow the market pretty nicely. But not today. We are down over 2%. We gapped higher. It looked promising. SOFI had that nice push with SPY, but then just came all the way back down. Very, very strange. But anyway, SOFI I was happy with. I have 200 shares now. Average cost of $7.25 where the blue line is. This was Monday. SOFI had a really nice push. And unlike Nike, I did wait for SOFI. Not necessarily because that was the plan. It was just the covered call of 750, which is the minimum strike I can get. It wasn't paying as much as I wanted at first, so I stepped away. I was at work too, so I did other things, and then I came back and was like, whoa, SOFI is up at 720, 725 or so. So it was a really nice push. It was already up like 2.5%, 3%. So I'm like, all right, let's go. My shares are in the profit now, and I'm about to sell calls. So I was able to sell 2 calls at 750, got 7 cents each. That's pretty solid for this kind of stock. It's a 1% return, about $7 on a $725 investment. $7 is about 1%, and getting 1% return in just 1 week, that's like a 50% annualized return. So very good premium there. Tuesday had an even better day as SPY pushed closer to all-time highs. The call was in the money, but now it's not. But it's okay. We're right where we want to be. The shares are still profitable. I have a covered call sold in profit territory. We're good. SOFI is still playing ball, and I'm happy. The wheel is turning with SOFI. Now let's go to CSIQ. CSIQ, just like Nike, kind of screwed me over because Friday had this massive drop and then put me in a situation on Monday to accept the bare minimum strike for the bare minimum premium. If it had just opened near 17, which is where it quickly got back to, I would have been able to get a better strike of like $18 and probably for better premium too. But instead, I took the minimum strike for the minimum premium when it gave it to me on Monday's little push here. So that ends up equating to calls sold at 17 for 10 cents each. And I have 400 shares at 16.25. And with the call sold at 17, that gives me 75 cents per share upside, which would be a $300 profit on my shares if I get assigned. And right now, CSIQ, not SOFI, is rallying again. This actually is up today. It opened better than this. I got a high of 18, came back down, but still up 1.6%. I'll take it. Calls are in the money. This happened last week, and I did not get assigned when I thought I was because we had this big drop on Friday. Now we're running the 17 strike back. It's in the money again. We still have all day today, tomorrow, and Friday. But right now, CSIQ is looking pretty strong overall, and my calls are in the money. So it's possible if it stays like this the next couple days, my trade's going to be over and CSIQ is going to be gone. So I have lines on this one too. It looks like we are possibly breaking out of this downtrend here. Depends where we close. You can see we're already kind of pulling back. So we'll see what CSIQ does. But I was very impressed to see that this massive drop, which looked very dire, was completely erased in just 2 days. And we're right back up to where we were before that big drop. So that's what makes me think CSIQ is pretty strong right now. How far will it go? I don't know. I'm thinking no more than 20 bucks, but I'm just going to let the market dictate my trade. I have covered calls sold. If I'm not able to roll them out and up, then I'm just going to take the assignment and walk away. So, and it should be a nice profit too, so I'm not upset about that. Comcast rolling over, unfortunately. But last week I did sell calls at 40. That was right here. On this massive push on last Wednesday, I sold the $40 covered call. Actually, hold on a second. I did sell a call on this pop here last Wednesday, but on this drop, I ended up closing it quickly for a profit. And then on Friday, I had another push back up to those levels around $39.50, and I was able to sell a call for this week at the $40 strike. So I played Comcast a couple times last week, and I have a covered call open at 40, and it got 23 cents for it, which is good. And on Tuesday, these calls were actually in the money for a brief time right up here. But we dipped back down a little bit on Tuesday, and now today, down over 1%, just a big fall. And not what you want to see, but at least I have a call sold against it, so the position is working for me. And this $40 strike is actually below my cost basis of $40.50. So I kind of bent the rules a little bit there by selling below my cost basis. But all it's going to take is one roll out and up, and I'm right back to my cost basis, which is a safe spot. So I'm confident that if the call gets pressured, I can just roll it out and up and put myself in a safe position. It did get tested. I did look to roll, but ideally I'd like to roll on a Thursday or Friday, because that's when the extrinsic value on the existing contract is going to be very small. And that would allow me to buy it back for cheaper than what I could sell the following week's contract for, and increase that net credit. The earlier in the option's life that you try to roll it, the harder it is going to be to get a nice credit. So the closer to expiration, the easier it is. So I did try to wait it out here, because it tested my strike on Tuesday. That's pretty early. I'm looking for Thursday, Friday to roll, but now I have some breathing room. So let's go to match group. This has been trending nicely. It had this huge earnings drop, but then every day thereafter, it's just been going higher and higher. And we actually filled the gap and are now higher than we were the minute before earnings came out. You know, we're higher than that previous close before the drop. So that's good. We reclaimed that earnings drop, and now we're up around 31.50, 32. I have shares at 34, and unfortunately we are still too far down to sell calls. Having a little bit of a red day today, but you can't be upset about this move. I'm very happy about that. I'll need it to get a little bit higher, probably to 33, before I can start selling calls on this thing. Very encouraging, but we still have some work to do. And the last one is RIOT. I just have a cash secured put, just one put at the $9 strike. And on Friday, we dropped over 10%, and that strike was looking in danger because we still have all this week left to go. But Tuesday was a 3% green day. Today, we're up over 2.5%. Up over $10, so now we're $1 per share out of the money, which is 10%, which I know it can drop in a single day, but that's still a good amount of a buffer. And with only tomorrow and Friday left to go, I feel pretty good. If I do get assigned, I would expect that I would only fall to around like here, you know, in which case I would be set up to sell calls nicely. The worst thing that could have happened is that this week we just continued from Friday's drop and went down to like 7 something. At that point, then my put would be greatly underwater, and upon assignment, my shares would be greatly underwater. So that's not good. Luckily, it's actually popping and having a bit of a green week. We're up over 9% on the week right now with RIOT. So that put is looking nice. And even if I do get assigned, I still have room to get up to like 400 more shares. So this is a very small starter position that I have out there. So that is the update, guys. That's what's going on this week. We have $85 in premium outstanding left to collect. You already saw me profit the $16 from closing the Nike covered call. So we're looking at about $100 on the week, give or take. So a little bit below my baseline, but last week was so nice at 275 that we're looking really good for May. And May, based on my accounting rules, has 5 weeks in it. So, and we're only on week 3, so we have another 2 weeks of May to really build up a nice month. So it's looking really good so far. Positions are doing well overall. Accounts at over 23,000, so that's really nice. And yeah, just take it one day at a time. So I will come back to you guys later this week with the weekly recap video and show you exactly how everything unfolded. All right, guys, until then, thank you for watching. If you enjoyed, hit the like button, subscribe for more content, and I'll see you all next time.